Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the lead portfolio manager for Fundstrat's U.S. Large Cap Granny Shots ETF, ticker GRNY. This is our update for the week of September 18th. Let me start with some particulars. As of September 18th, the price of Granny Shots ETF was $24.71, net asset value of $24.68, and total assets of $2.7 billion. Over the past week, Granny Shots was up 4.22% compared to a 1.88% gain for the S&P, or 228 basis points of relative performance. Year to date, Granny Shots is up 24% compared to a 13% gain for the S&P, or roughly 1,012 basis points of outperformance. I wanted to start this video by talking about the macro because the Fed easing cycle is underway. The Fed announced a 25 basis point cut on Wednesday, and it was dovish in my view because the Fed acknowledged not only is a future cuts coming, which is an easing cycle, but that he acknowledged that the inflationary pressures from tariffs was less than they were expecting. So again, more in the camp of transitory inflation. This is something that we had taken a view on over at Fundstrat, that we'd expected stocks to rally post-Fed. And we see that indeed there was good follow-through in both the Nasdaq and small caps, which outperformed the S&P, the Nasdaq up 1% in the 24 hours after the Fed announced this cut, and small caps up 2.5%. Now, you might wonder, will stocks continue to gain? And the answer, in our view, is yes. I'm citing some stats from Ryan Detrick at Carson Group, and he points out that when the Fed cuts within 2% of all-time highs, the S&P is higher 20 of 20 times, with an average gain of around 14%. Now, you're going to wonder, what will outperform post-Fed? We just want to give you a simple framework, okay? The Fed is dovish, and that's monetary liquidity. That should be good for risk assets. We also think the Fed wants CEO confidence to recover, which we would measure through the ISM moving back above 50, because that'll boost employment. The spread of mortgages to 10 years should fall, which should boost housing. And he's reducing the benefit of owning cash. It's getting less yield. And that's going to push cash off the sidelines, and that's risk on. So in a simple way, I think the three things to focus on would be MAG7 and AI stocks, crypto, which is Bitcoin and Ethereum, and then interest rate sensitive groups like small caps and financials. But I would say, historically, the initial bigger effects tend to be monetary liquidity and the fact that cash is coming off the sidelines. And we can see in the short day and a half since the Fed announced its cuts, the leadership has come from crypto, Ethereum, and Bitcoin. That's very similar to what happened in 2024 when the Fed cut in September after an extended pause. The stocks that are most correlated to Bitcoin and Ethereum are MicroStrategy, ticker MSTR, which gained 6% on Thursday, and Ethereum, most leveraged stock is Bitmine, which is the largest holder of Ethereum in the world, and that gained 5%. Many of you might think markets are in a bubble because the Fed's cutting near all-time highs, but as we pointed out, that's happened many times, and 20 of 20 times stocks still gained after that. But I think the way to think of it is to think about NVIDIA, which happens to be a granny shop. But as you can see, NVIDIA's PE is 26.6 times. Now, do I think that's expensive? I don't. First of all, as you can see on this chart, it's in the middle of its range over the last 5 years. But keep in mind, Costco and Walmart trade at 48 times and 34 times earnings. These are far less scarce and unique than NVIDIA. NVIDIA is the most scarce company in the world today because they make a chip that every AI company needs. So until NVIDIA trades at the same multiple as Costco, I think NVIDIA is not in a bubble. Now, let's go back to Cisco, because a lot of people think Cisco is the template for NVIDIA today. Well, in 1998, September 98, Cisco was at $16 and 55 times forward earnings. Why am I setting September 1998? Well, that's similar to 2025. The Fed was on an extended pause and then they cut in September. In the following 12 months, NVIDIA went to $80 per share and its PE went to 210 times. So its stock went up 5x and the PE went up 4x. Now that's what I call a bubble. We're not there yet with NVIDIA today at 26 times forward earnings. More importantly, look at sentiment. The AAII net bulls less bears is still negative. There's more bears than bulls at an all-time high. In fact, we've had 7 weeks now where markets have made an all-time high, and yet sentiment is negative. Yes, you can't really say we're at a top if investors are bearish at the highs. So let's talk about granny stock performance. The top 5 performers of the past week are Oracle, Tesla, Vistra, Lam Research, and Palantir. Now, they're all AI related, but Oracle, of course, surged on good earnings, and Tesla is gaining because Elon Musk made a pretty big insider buy of $1 billion. The worst 5 performers were Garmin, Amazon, Robinhood Markets, Cadence Design Systems, and Netflix. Some of this is profit taking, especially a stock like Cadence. And in terms of themes, the best performing theme was energy and cybersecurity, led by Palantir and Vistra, and GE Vernova, and labor shortage, which is Oracle, Tesla, and Lam Research. Seasonality also worked. Again, Oracle was flagged as a seasonal trade, as was Palantir. But Palantir has been a grainy shots for a long time, as well as Oracle. That's it for now. Thanks for listening, and I'll speak to you soon.